Hey there, I want to welcome everybody to tonight's broadcast, 8 o'clock straight up here on the East Coast. Looks like we have some folks here from the East Coast, some from the central United States and some way out west. Excited to have everybody on tonight's broadcast. We'll get started here in just a couple minutes. While we wait to get started, go ahead and say hello in the chat. Where you're coming from tonight, what city and state, and also would love to know your full-time profession. What do you do for a living? Full time. So go ahead and drop that in the webinar chat so we get kind of comfortable with each other as we get started here tonight. My name is Chet Seeley, coming in from Florida here, just so you know, and excited to be able to share with you this evening a little bit more about DebtCleanse and homeownership program. So go ahead and jump on in here. Name, city, state, and what you do, full-time job. Would love to connect with you in the chat as we wait a couple minutes to get started. So welcome to tonight's presentation around homeownership program. Excited to be able to tell you a little bit more about this amazing platform. Look forward to sharing with you a little bit more about the vision of the company and where we're headed as an institution. Welcome, Carlina. Good to see you again. There in Atlanta, of course. Daryl, cybersecurity. Welcome over there in Arkansas. Congratulations and thanks for being here tonight. Go ahead and drop your name, city, state, and your full-time profession in the chat, if you would, as you're coming in here tonight. We'll get started in just one more minute. One more minute, we're going to get started. So welcome to tonight's broadcast. Look forward to jumping in, sharing a little bit more about this platform. Ebony from Lawrenceville, welcome. Health and life insurance agent. Fantastic. Good to meet you, Ebony. Welcome. Emily J. Over there in Memphis, Tennessee, realtor full-time. Congratulations and welcome, Emily J. Good to have you on the line tonight. All right, we're going to wait 30 more seconds and then jump in. 30 more seconds. So go ahead and say your name, city, state, full-time profession as you're coming in here. Teacher, Alicia over. Alicia, where are you coming in from tonight? Give me city and state if you wouldn't mind. I would love to connect with you and kind of know where you're coming in from tonight. So welcome to the platform. Look forward to telling you a little bit more about this amazing opportunity and a little bit where we're going as a company. Makira in Chester, Pennsylvania. Welcome. Good to have you, entrepreneur. Alicia, you're from Camden, New Jersey. Welcome, Alicia. Good to have you on here. Tucker, Georgia. Welcome, Collins. What's your full-time job, Collins? Just go ahead and drop it in the chat. We're just finding out a little bit more about each other as we're getting started tonight. All right, we're going to go ahead and jump in and talk to you a little bit more about this platform. I could not be more excited to tell you about this homeownership program and some of the differences that we're making all across this country. Retired, good to know that, Collins. And some of the ways that you can help make a difference with this platform. Things that maybe you never thought were possible. Definitely things that I never thought was possible. So a little bit about me growing up, second generation mixed race family. Mixed race marriage now as well, by the way. So our family, probably like many of yours or people that you know, have members of the family that are African-American, members of the family that are Latino, members of the family that are white and Asian. It's America, right? So families tend to look like America. Lots of different racial ethnicities in our families. And at least with my family, it's been that way for many generations. And probably like many of you grew up in a minority neighborhood, or maybe like some of you, shouldn't assume many of you, but probably like some of you grew up in a minority neighborhood. And that was never an issue. I honestly felt like, although it was a little bit of a rough neighborhood in North Philly, it was something that there was a lot of love. It was the kind of neighborhood if a car broke down, we knew we needed to pick up that family's kids and take them to school the next day. If someone's car got repossessed, which happened a little bit more often in our neighborhood maybe than some, then we knew we had to pick up the neighbors' kids and family and get to church on Sunday. That was just the nature of things in our neighborhood growing up. So a great neighborhood. Unfortunately, our neighborhood was a situation where we struggled with finances. I think everybody in the neighborhood pretty much had that in common. There wasn't enough money to go around. Certainly in my family growing up, it was never a matter of being able to pay all the bills. It was figuring out which bills you weren't going to pay. And it seemed like one or more of the creditors every month was not going to get paid. So that was certainly the situation in my family growing up. And again, I don't feel like our situation was that dissimilar to probably a lot of your situation or people that you know. And that's why we're here talking about this platform tonight. It's an amazing opportunity for you to help people in a similar situation get to a better place and discover home ownership for themselves and their family. The mission that we have is all about 75% home ownership for everyone. 75 for all is the name of the movement. Why is it 75 for all? Because for many years in the United States, white families have had home ownership rates that border or even above 75% in some cases. So we want that opportunity for all families, regardless of your ethnicity and your background, whether if you're Black, brown, or mixed race families. We want to make sure that every family in the United States has this opportunity. So this is about making a positive impact in your community in the form of home ownership. It's also, of course, going to help you financially, and that's exciting. It's going to help you financially, but I'll tell you, that's not what it's about. It's about impacting the neighborhoods where probably you grew up, certainly in neighborhoods like where I grew up, and really helping families step into home ownership. Home ownership is the beginning of wealth creation in this country. Go ahead, Google it later after you get off the call. Look at the relationship between home ownership rates and wealth creation. You're going to see that there's a direct line between the home ownership rate and the ability for families and individuals in the United States to create wealth. And so I want you to think about that as you look at the stats on this slide. Right now in America, it says that home ownership rates for white families are at 73%. It's actually not, just bordering on 75% now. Latino families are at 49%. African-American Black families are at 44% in the United States. Story doesn't end there. LGBTQ families are at 47%. Women-led households are at 51%. And young adults in the United States are at 35%. So families under the age of 31 are at 35% home ownership. And so we're here for all of those groups, but in particular, ethnic minorities in the country have been at a significant disadvantage, and it's based on skin color. I mean, I wish I had a different way to say that, but it's just true. It's based on skin color. If you live in a mixed race family or Black or Latino family in the United States, you already know what I'm talking about. And so again, the goal is to lift this up to 75%. Whites haven't done anything wrong in the country by taking advantage of the laws that are available to them. It's just they haven't been equally available to all of us. So what do I mean by that? I'm talking about a specific practice that was related to housing began in the 30s. In the 30s, government had a great idea. Hey, let's make mortgages available for 30 years for the first time. Great concept. We could spread the cost of a mortgage out for 30 years. It would make it affordable for everybody, right? Same time, they launched something really ingenious. They came out with the FHA and low interest rates through the Federal Housing Administration. Again, what a great idea. Combine low interest rates with a 30-year mortgage, and you have something that literally every family should be able to afford some sort of a home and step into wealth creation in the country. The problem is, at the same time they launched mortgages and low interest rate loans, they went ahead and colored the maps of every single city in the United States, different colors. You can see a legend right there in front of you. Green meant there were white people living there. Blue meant not as many white people. Started to get different ethnicities in those neighborhoods. Yellow, hey, we got a lot of mixed race or Black or brown America was in those areas. And red is just, everybody was too many Black and brown families or mixed race families in that area to lend. And look at the label on those communities where families probably like yours and mine live. They were labeled hazardous. It was literally labeled by the federal government as a place where they would not issue any kind of mortgages simply because the skin color of the families or individuals that lived in those neighborhoods. Well, without any mortgage financing, without any mortgage being issued in those areas, you can imagine those areas became more difficult to obviously own a home in. And without the homes being owned, it was difficult to generate wealth. And those neighborhoods were at a significant disadvantage to other neighborhoods in the United States. So that's the legacy we have. We all know history, so the 30s, 40s, 50s, 60s were very difficult for mixed race or ethnic minority families to own homes. Conceptually, I guess it got better 68, 69, but in practice, home ownership rates for African Americans and Latino families really didn't start to increase until 80s, 90s. And then the Great Recession hit. Great Recession hit prior to the Great Recession, one of the big drivers of the Great Recession was subprime mortgages. And what a subprime mortgage is a high interest rate loan to a group of people, supposedly based on their income levels. We could argue whether that's true, but they were high interest rate loans based on, again, certain neighborhoods or certain areas where people lived in the United States. And those high interest rate loans or subprime loans were disproportionately taken up by African-American and Latino and mixed race families. So when the Great Recession hit, those families, Black America, Brown America, and mixed race families were disproportionately hit by the Great Recession and lost their homes in larger percentage and larger numbers overall. So this law, or rather statute, came out at about that time called Dodd-Frank. Great idea. They were trying to prevent subprime mortgages from being issued to ethnic minorities. That's actually a great idea. The problem is the solution. The solution they came up with, they made it so there was not real financial incentives to issue loans to neighborhoods where there were lots of subprime mortgages in the past. What neighborhoods would those be? Areas where there were African Americans and Latino families, mixed race families, those neighborhoods. So in many cases, the same neighborhoods that were redlined back in the 30s were hit by the subprime problems in the 2000s. And then after the subprime problems, because Dodd-Frank, it made it nearly impossible for mortgage companies to issue mortgages in these same neighborhoods. So we saw homeownership rates fall again for the very same people, same groups of people rather, that were hit by redlining back in the 30s. Homeownership rates did start to trickle up just a little bit before COVID, but on the other side of COVID, we're actually seeing homeownership rates, especially for Black Americans, trending down. It's going the wrong direction. So if you're under the impression that, okay, well, white America is at 75% and Black America in terms of homeownership is at 44%, but they're trending up, they're not. It's actually trending the wrong way for African-American families and individuals. And so that's what has to change. And that's what this platform is all about. And I believe we probably have a lot of African-American or Latino or mixed race families on the call tonight, but if not, you have family and friends that are women-led families, LGBTQ individuals who also have difficulty in achieving housing rates like up to the same level as a heterosexual white couple. Certainly African-American and Latino families, mixed race families are struggling today with home ownership. And that's what this platform is all about. The vision that George, the co-founder and CEO of the company, and myself had together was, could we come up with a solution where we could put a mortgage loan officer in every single city in the country and then eventually every neighborhood in the country? Growing up in a family where we rented, we didn't know any mortgage loan officers, and we wouldn't have gone to a bank. That makes me laugh just thinking of my parents trying to walk into Bank of America or Chase or something like that and ask for a mortgage. That would have never happened with our family. And I don't think our family is all that unique. Same situation. I don't think my parents would, or I certainly wouldn't have known who to talk to in the government for help with home ownership. So if those two options are out, if you don't know who to talk to the government, you don't feel comfortable talking to a bank, who are you going to talk to if you're in one of these neighborhoods to try to figure out how to become a homeowner? You don't feel like you qualify. In some cases, you come from generations of renters. So it's not just your family that doesn't qualify. Nobody in your neighborhood qualifies. Everybody's renting. So it's a problem with entire neighborhoods or entire communities in the United States. So when you think about it that way, access to housing is largely a distribution problem. You need community loan officers in every neighborhood. You need those loan officers distributed throughout the country. If they were in every neighborhood, then we could begin to see homeownership rates tick up because people in the neighborhood would know who to go talk to about getting a mortgage for the first time. So to make that happen, the vision that George and I had was to put inexperienced or experienced mortgage loan officers in every single neighborhood in the country. How would we do that? We would work with a federally chartered credit union who could hire all of our independent representatives to be loan officers. And if a federally chartered credit union hires our independent agents to be federal mortgage loan officers, then there wouldn't be, it would cut through a lot of red tape, licensing that exists on the state level, tests that are required on the state level, education that's required to become a mortgage loan officer. All of that would go away if we were able to be successful with the federal credit union hiring all of our independent representatives. And that's just exactly what we've done. We've cut through all the red tape with a simple sign up, a background check, and an NMLS number issuance. You can become a federal mortgage loan officer. It says within 2 weeks on the slide in front of you, but in reality, it's closer to 4 to 5 weeks right now, just because the platform is experiencing absolutely explosive growth. We'll get a little bit more into that as we go into this. But we are actively recruiting mortgage loan officers all across the United States, real estate agents, entrepreneurs, investors, pretty much anybody who cares about their community, wants to make a difference, social activists, community organizers, teachers, faith leaders of every faith are on the platform, seeking to make a difference for their community. Moms, dads, entrepreneurs, all different kinds of people are seeking to get on the platform, make a difference. Realtors in particular, though, have onboarded to the concept in record numbers, and there's a reason for that. Back in December of last year, the statute changed in the United States related to home sales. And prior to last year, a realtor could not be a loan officer on the same transaction. They either had to be the realtor or they could be the loan officer, but they couldn't be both. That rule changed in December last year, where realtors can participate in both sides of the transaction. So they're able to earn a commission for being the real estate agent, of course, but they're also able to earn a commission for being an MLO on the exact same transaction. So because of this, we're onboarding, as you can imagine, lots of realtors. I'm sure some would love to earn an extra commission, but most are wanting to control the transaction. If you can put yourself in the shoes of a realtor for a second, you've worked hard to get a client, you want to show them homes, but you got to kind of toss the responsibility for loan origination to somebody else. It's a little it'd sometimes be a cause for concern. If the mortgage loan officer doesn't do what they're supposed to do, then you're going to lose your client, you're going to lose the mortgage. So realtors are excited about the platform because they have more control over the process. Let's talk a little bit more about what we mean by mortgage loan officer on this platform, because different platforms, it means different things. And definitely on this platform, when we say loan officer, it means 3 specific things. Number 1, you're going to be passing out the link, your mortgage application link, to friends, family, people that you know, people that you come in contact with, people in your community who are looking for a house. Might be a first-time home buyer, might be a family that's trying to upgrade, might be somebody who is just trying to maybe get out of renting and get into a more stable situation so their family can start to save money. Lots of different reasons that people are looking for a loan, but you would pass out the loan link and you'd help people fill out that loan, number 1. Number 2, you're going to answer questions from the prospective buyer regarding the actual loan product. And then you're going to kind of assist and be a go-between between the lender, the person who's funding the loan, and your buyer, the prospective home buyer, and you're going to answer questions that they have. So that's what we mean by loan officer on this platform, which is different than what a traditional loan officer does. We'll talk a little bit more about that in just a minute, but want to make sure you're really clear. This is a kind of a narrow list of duties that are related to home ownership, or rather being a mortgage loan officer on our platform. So I want to make sure you're aware of that. A couple minutes ago, I referred to some state licensing, state tests, state requirements to become a mortgage loan officer. And that's true. The normal way to become a mortgage loan officer is on a state-by-state level, and there are rules and there's a process that applies to becoming a mortgage loan officer. So the traditional route, which is the state route, you would have to go out and complete courses. You would have to take classes, right? So you would pay for these classes. Cost of the classes vary. So depending on the class you chose, the course you chose, it would cost different amounts of money. Next, you would have to pay a licensing, an exam fee, and then you'd have to sit for that exam, hopefully pass the exam. Exam rate's hard, it only has about a 50% pass rate. If you passed it, you still have annual renewal requirements, there's annual licensing requirements, there's annual continuing education requirements. So there's lots of different rules and regulations and process and fees that are required to become a state mortgage loan officer. And when you're a state mortgage loan officer, you do all of that, and you're only a mortgage loan officer in one state. So if you want to become mortgage officer in 2 states and then 3 states, all the way up to 50 states, you have to do this process all over again. How many times? 50 times. And then every year you would have the requirement to maintain your renewal and your license 50 times every year. So it's a very difficult process. There's a better way to go about this, though, and it's utilizing the federal mortgage loan officers. So state mortgage loan officers, the traditional route, but there's an entirely different category of mortgage loan officers in the United States, and those are federal mortgage loan officers. Completely different set of rules. For federal mortgage loan officers, you sign up, you receive training, you complete a background check, and after you do that, you're able to originate in all 50 states. So there is no state licensing, no state fees, no continuing education requirements, no annual renewal process or any of that. None of the fees apply that exist on the state level. So completely different process, and everybody would agree that it's a lot easier to do it this way than the other way, the state by state way. So because of that, we have record numbers of people who are signing onto the platform because they can help now originate loans in all 50 states to friends, family, people they know, or people they don't know that they come in contact with that are looking for a home. If you have people that don't yet qualify for a home because, you know, financial problems, credit problems, my family, I shared a couple of points during the broadcast. I already had some financial problems as I was growing up. Financial problems largely were a result of my mom and dad wanting to have kids. They had a difficult time having kids. I'm grateful they continue to persist with that. But they got into debt because of that. So if your family's like my family, which I think a lot of families are, then they may not be able to step straight into home ownership from day one, but that's okay. Our company DebtCleanse existed since 2018 as a legal plan. Our job and our opportunity as a legal plan is to help families work through their financial problems. How do we do that? We help companies dispute their debt and deal with debt situations they're facing. Could involve their credit as well. So whether we're dealing with working with attorneys to help you dispute debt, or having our attorneys quarterback the process to help with your credit, working with the credit union, or whether you need some more tangible hands-on help with homeownership like down payment assistance or even income documentation, we can help with all those things. So if you're dealing with financial issues, then the attorneys can help with that. If you are dealing with down payment issues, again, the attorneys can help with that. If you need help documenting income, we've got you covered there. If you are working and don't have enough money, can't afford the house because you just don't have enough money, then this platform offers you the opportunity to earn commissions and be able to save for a house and actually get your family into a house. I mentioned earning commissions. That's one of the benefits that you have as a community loan officer. And I'll get a little bit more into that in just a minute. But before I do want to go into the real other benefits that I think are on this platform for your family, for people that you know. And that really has to do with the loans and the mortgages you're going to be able to extend to people that you know. We're not talking about subprime loans or mortgages here, nothing of the like. We are working with a federal credit union. In fact, truth be told, at the very beginning, there was only one credit union, but we've had tremendous growth. And so a second credit union onboarded to our platform, then a third, then a fourth, a fifth, a 10th, a 20th, a 50th, a 100th. We're up to 151 credit unions that are all working in a sort of a co-op called a credit union service organization. So they work together on your behalf on this platform to help you do exactly what's in front of you on this screen. Help prospective home buyers with the very, very best government-backed loans and mortgage products that exist in the entire market. So these are not subprime or substandard loans. It's the very best government-backed loans you could possibly get. Most of y'all know that the best situation, best opportunities exist with the credit union anyway. So we're talking about 151 credit unions going to bat for you and people that you know. We're talking about FHA loans, VA loans, USDA loans, Fannie, Freddie, every one of the very best loans you can imagine. We can even write loans for credit scores as low as 580 through the Federal Housing Administration. So a tremendous opportunity through FHA to help out families even with low credit scores. I don't recommend you do it unless the family really has their heart set on a certain house that they're worried that they're going to lose. The reason I don't recommend you do that is you have an opportunity, if someone's at a credit score of 580, to put them in the services I was just talking about right? The legal plan, the income documentation, and the down payment assistance. Put them in the services and let's get that score up and work with through the financial scenario that's holding them back. But all different kinds of loans that you can imagine are available on the platform. So if you have families that are looking to fix up their home, a lot of our homes in our neighborhood growing up were definitely fixer uppers, right? So we have 203K loans or other rehab loans that are available for individuals to apply for. If someone's new to the United States, they don't have a social security number yet, they only have their ITIN. Then we have ITIN loans for people in that situation. Again, it's through the credit union. If someone's working on new construction or any other kind of loan that you've commonly seen available in the marketplace, between the 151 credit unions that work with us on the platform, they're all available to you and your prospective buyers. One of the features, though, as I go through all these different kind of loans, one of the features of the platform that will be really helpful, not everybody on the broadcast tonight knows what the difference is between FHA, for example, and USDA, right? That's okay if you don't know that, because we're also going to pair you up on this platform with a loan buddy. We'll talk a little bit more about what the loan buddy is, but they're there to help you. So as you kind of talk to a prospective home buyer, you have all the information that you need and the kind of the on-the-job training that you're going to want, so you can successfully explain everything to a prospective home buyer and feel confident you're giving them great solutions and an amazing loan product to help them and their family get into a good situation financially. So let me talk to you a little bit more about what the loan buddy does versus what the loan officer does. You already know what the loan officer does because we've already covered a little bit about it, right? You're going to help the home buyer complete their application. You're going to gather documents that the credit union needs to see to approve the mortgage and review the mortgage. And then number three, you're going to answer questions back and forth and generally assist the buyer regarding the loan products. If you look at the loan buddy, it sure looks like they have a lot more to do than maybe you as a loan officer would have to do, right? It's actually true. There's quite a few more steps and more things that need to be done to get a prospective home buyer all the way over the finish line to underwriting and to funding that loan. And that's where an experienced loan officer, which we call a loan buddy, will step in and help you out. Loan buddies on this platform work for the credit union. They work for the credit union for a minimum of 10 years. They will be assigned to you. One of them will be assigned to you. You'll have a relationship with this person. They'll know your name. You'll have the opportunity to connect with them, ask questions. If your home buyer is wondering about this or that, you'll be able to get the answers to those questions from your loan buddy at the credit union. It's the loan buddy's job to do all the really heavy lifting. So you're going to do about 15% of the work and you're going to get about 85% of the commissions. On the other side, the loan buddy is going to do about 85% of the work and they're only going to get about 15% of the commissions associated with the loan. It has to be this way, though, if we're going to have loan officers in every community. We need to heavily incentivize and have you have a commission structure that rewards you going out and of course connecting with people that want to be home buyers, but also recruiting other loan officers to the platform so that we can achieve the goal of 75% homeownership for all families. Now, I just mentioned commissions a few times. I've talked about this 85-15% split in commissions. So let me get into a little bit more detail about what I mean by that. Let's say that there's actually three ways that you earn commissions on our platform associated with a home sale. The first of all is your personal production. Second of all is your recruiting. And third is for supervising, motivating, coaching, and training a team. So personal production, recruiting, and teamwork are the three ways you make commissions on the platform. Let's talk about, first of all, real simply, the personal production. You go out, you help a family that you know connect with this platform. They apply for a loan, they approve for the loan. Let's say that the transaction was $200,000. On a $200,000 mortgage, the commission, 100 basis points, is 1%. That's what 100 basis point or BPS means. So 1% of 200,000 is $2,000. So it is very conceivable somebody could come on this platform and within the first month of being on the platform, bring one or two buyers or maybe three buyers to the platform, close on loans. And like I just gave you in that example, a $200,000 transaction is $2,000 in commissions being generated. So it's very conceivable somebody could step on the platform right out of the gate, first few weeks, and earn $2,000, $3,000, $5,000, $6,000, depending on the transactions they're bringing to the platform. So if you do know people who are looking for a way to make a difference in their community and on this side make some pretty significant income, this would be a platform that you'd really want to perk up and pay attention to. As you're earning your commissions, you're going to split some of those commissions initially with the Loan Buddy. And you can see that little chart here on the right side of the screen. On loans 1 through 10, you're going to split 35% to the Loan Buddy. The next 10 loans, 11 through 20, you're going to split 25%. And then above 21, you have a chance to just cut away from the Loan Buddy if you want. If you want to stay with the Loan Buddy, then they would make only 15% at that point. And that way, that's what I meant by 85%, 15%. You'll have a chance to earn that money. So why is the Loan Buddy getting cut in on the transaction? Because they're training you to begin with to make sure you know what you're doing. You don't have to do the licensing. You don't have to do the tests. You don't have to do any of those things, but you certainly do have to learn how to do this and become proficient at it. And so you're going to have kind of that on-the-job training with the Loan Buddy and be able to continue to rely on them as you get good at what you're doing, learn the ins and outs and the ropes. And the Loan Buddy is there to make that possible so you can step into commissions right away as opposed to doing the licensing and tests and all that other kind of stuff. Madeline Barrios just asked a question in the question function here. Do they have to do every transaction with you? The answer is, as a federal mortgage loan officer, you actually have to be hired by the credit union. We'll talk to you a little bit more about that process. I hinted about it a couple minutes ago. Talk to you a little bit more about that process in just a minute. As a federal mortgage loan officer of the credit union will be underwriting and funding the loans. We don't broker out any of our loans. They're all funded in-house. So the answer to the question is, Madeline, yes, all of the funding of the loan takes place on the platform through the credit union, and we don't broker out any of our loans. We have control over not only that, but the servicing, so we take care of the customer on the back end as well. Okay, so we talked about the first way to make money is through your personal production. Second way to make money is through recruiting. Whenever you recruit somebody to the platform, you have an opportunity to make 10 basis points on any of the production that they do. So let's say you recruited me and I was a realtor and I came to the platform. I was a mortgage loan officer rather, and I came to the platform and I helped out with closing loans. Because you introduced me to the platform, or you recruited me to the platform, any loan that I had a role in helping to close, you would make 10 basis points on that transaction. Doesn't matter if it's 2 years from now, 5 years from now, 10 years from now. It doesn't even matter if you kept in touch with me. Because you recruited me to the platform, you have the opportunity to earn 10 basis points on all of my personal production. So that's the second way you earn money on the platform, is through recruiting. Third way you earn money on the platform is by helping your team succeed. So if you're a broker, this is perfect for you. People that are in that situation would know exactly what this looks like. You have an opportunity to help people close loans. As they're closing loans, they're active. You earn part of the an extra bonus rather related to them being active on the platform. So those are the three ways you earn on the platform related to being a mortgage loan officer. So there's lots of ways you can help families on the platform. You can help families become homeowners right now, first-time home buyers, renters, people that are trying to change things up and get to a better situation for themselves and their family financially. Obviously, you know that interest rates are going to come down over the next, excuse me, few years. When they drop, then you're going to be able to help the same families again. When families then upgrade homes in the future. I have 4 kids. Probably many of you have kids as well. If you have 4 kids like I do, you probably had to upgrade your home once or twice. Well, people are going to come back to you as the mortgage loan officer because you're the one that helped them get in the home in the first place, and you took time to create that relationship. Because this is a 50-state mortgage loan officer opportunity, not a 1-state mortgage loan opportunity, and because there's significant ways to earn income, there's a tremendous number of people onboarding to the platform right now. There's nothing like this in the marketplace. And so we see different kinds of professionals, different backgrounds, amateurs or novice entrepreneurs are also on the platform to help out because they want to make a difference. And we welcome everybody to the platform because it's that kind of effort that's going to, again, solve this distribution problem. We'll have a mortgage loan officer in every neighborhood throughout the entire country. If you were trying to do what we've done and go out and do all 50 states, become a mortgage loan officer in all 50 states, the continuing education requirements in every single state every single year, you would pay between $25,000 and $50,000 just to be able to participate as a 50-state mortgage loan officer. So it's tremendous cost on the platform if you were trying to do what we've done. On this platform, we are going to make you a 50-state MLO after you sign up and complete your background check and go through the NMLS process. The platform fees are only $249.90. So not $25,000, just $249.90 to become a 50-state mortgage loan officer on the platform. Of that $249.90, $89.95 is a monthly service. What's the service? What does that mean? It's the legal plan services I just talked to you a little bit about. There's a bunch of other services in that platform of services, that suite of services. We're not going to go through all that today. That's not the audience that we're talking through tonight. I'm talking to you as a credentialed professionals or somebody who's probably associated with real estate one way or the other. That's why you're on this broadcast tonight. The reason why we want to make sure that you're participating in the services is more than likely you'll be helping some of your prospective home buyers get into the services to, clean up the financial situation so they can get along and get that mortgage eventually. Well, to have credibility, if you're explaining those services, you need to know about the services. So you need to be using the services, but there's some other tangible benefits to being able to use the services that we're talking about here. And you see those checked on the screen. Number one, that third bonus pool that we talked about just a minute ago for mortgage loan officers, that third way to earn is only available if you're active on the services. So you lose one of the three ways to earn as a mortgage loan officer if you're not on the services. Number two, just 2 weeks ago, we rolled out, in addition to the 50-state mortgage loan officer opportunity, we also have another opportunity, no additional costs for you to become a title rep and earn title 20% net in every single state in the country. 50-state title opportunity is available to you, but only if you're using the services. There's also the opportunity on this platform to recruit realtors to the platform. And whether or not you bring a mortgage to the realtors, it doesn't matter. There's a whole bunch of other mortgages being generated on the platform. So we'll be matching up MLOs of buyers of homes with realtors. When you bring someone to the platform who's a realtor you recruited, you earn extra money. Again, doesn't matter if it's your loan or your transaction or not. If you recruited the realtor to the platform, you make extra money each time that realtor closes a loan or a home rather. So a tremendous opportunity that only exists if you're on the services. There's incentives that we have as a company that you'll be able to participate in. There's group life insurance that you can participate in as a company, company membership participant. Also, you have an opportunity to earn your services for free. I'll talk to you a little bit more about that in just a second. There's travel promotions. And we also just announced not too long ago, we're working towards IPO of the company, and we're issuing stock in preparation. And as we work towards it, no guarantee that that's going to happen, but for those of you that have worked with us in the past, you know that we have a strong track record of creating record growth companies, not once, not twice, but I've been able to lead 3 different companies to over $1 billion in annual sales. So we're looking forward to IPO this company, and you'll be able to participate in the stock program that we have as a company. Madeline asked a question here in the chat. Okay, but does the buddy have to list with all the applications? Depending on your experience level, the buddy may not have to assist with all of the applications. So if you're an experienced mortgage loan officer, they probably wouldn't have to assist with all the applications. If you're not an experienced loan officer, then we'd highly recommend that they participate in that to make sure they're compliant and make sure that the prospective home buyer doesn't have any issues as they're working towards closing the loan. So that's what membership is all about. You're welcome, Madeline. That's what membership is all about. As I mentioned, one of the membership benefits is 5 is free. It's a real simple concept. The concept is we don't want your money. We want to introduce prospective home buyers to this platform. And the way we incentivize you to do that is to go out and introduce 5 people to the platform. When 5 people come onto the platform, you don't pay for your services. So you still have all those benefits, the title, the recruitment of realtors, all the other financial and product related benefits we just went through. You have all those, but you no longer are charged, or a better way to put it is your charges are waived every month because you introduce 5 prospective home buyers to the platform. That's what this is really about. We want to get home ownership and make it available. It's a right at the end of the day. So we want to make it available to every single individual and family in the United States, regardless of their background, their ethnicity, or their situation. So we really want to encourage you to become a part of the platform and contribute in a very meaningful way to homeownership throughout your community. The communities we live in are communities we love, and most of us have grown up in the neighborhood in which we live, or at least the neighborhood we live is usually very close to where we've grown up. In other words, we love our families, we love our friends and our neighbors. We want to make a difference. We are by far and away the fastest growing mortgage loan origination platform in the country. There's not another company that's growing. We're probably going at least 100 times as fast as our nearest competitor. That's how fast the platform is growing right now. With that kind of growth, we will have more success stories over the next years related to homeownership on the platform than probably any other company. And again, this isn't a big box mortgage kind of scenario. We're working with federal credit unions on this platform to give you the very best scenarios for your home buyers. Those stories, as they ripple out throughout the United States, are just going to be amazing and super high impact. And we can't wait to be in a neighborhood near you and share those stories with someone that you know and somebody that you made a difference with. We want to encourage you to get back to the person who invited you to tonight's broadcast. I really believe that choices change lives. I think if everybody's presented with the opportunity, the choice, they're going to make an amazing decision for their family or for themselves. The problem is we don't all have access to the same choices in life. That's the problem. And somebody when I was 19 was a champion for me, mixed race kid trying to figure things out. They were a champion for me and they were in my corner. And so this platform has the opportunity to be a champion for many tens of thousands, indeed millions of families. Our vision is over the next 5 years, we're going to impact 1 million families' lives with this platform. And we want to be the champion for them. As we champion their situation and their cause, they're going to have different choices in life. They're going to have access to the very best government-backed loan products that credit unions can even provide. And so once we give people that chance, that choice, they're going to make the great choice for their family. I'm confident of that. We're just excited to be able to be a champion in the corner of every family in the United States, so that 75% of homeownership can be available to all of us, not just the select few. We appreciate you being on tonight's broadcast. Again, my name is Chet Seeley. This is the fastest growing loan origination platform in the entire country right now. And it's there's some commissions to be made. That's true. But it's really the opportunity to go out and impact people's lives and change the face of homeownership all across the country. That's what people are excited about, and that's why we're experiencing such huge growth. Get back to the person who brought you on tonight's broadcast. We'd love to welcome you to the platform. After we welcome you to the platform, we'll move you along to the actual background check, real simple, efficient process, and then we'll move you into the NMLS sign up and get you hired over with the credit union. After you're hired, just a couple weeks later, we'll get you out there originating loans, and you'll be able to work directly with your loan buddy at the credit union. Thanks so much for being on the broadcast tonight. We appreciate you guys. I cannot wait to meet you in person as we continue to share the message of homeownership for every single family all across the United States. Thanks so much and have a great evening. We'll talk to you soon. Good night.